Hello everyone, hello Finimizers. Welcome to another Finimize live event. My name is Stefan. I'm an ex-portfolio manager, now analyst at Finimize, and I'm very happy to host today's event on an expert's 5-year investing plan with our partner, Stocklift. So first, let me just walk you through some basic housekeeping rules. As you're coming in, please fill out the poll. It should appear, boom, magic, right now. Feel free to introduce yourself in the chat, tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. In terms of format, it's going to be 15-minute discussion followed by 15-minute audience Q&A, and make sure to use the Q&A box to ask a question, not the chat box. And if you see a question you like, you can upvote it so it moves to the top, and that way we get through the most upvoted questions first. Okay. Let's kick this off. So our event partner today is Stocklift, a fintech platform designed to help people make informed investment decisions. It provides advanced portfolio tracking tools, a weekly stock market simulator competition, and a marketplace to connect with financial advisors. So, you can join the Stocklift community to propel you in the future of investing and close the advice gap. I have to say it looks extremely cool. And yeah, highly encourage you to check this out. Today, we're very fortunate to have Brendan Sweeney here. As a co-founder at Stocklift, Brendan saw the value in a diversified investment portfolio and developed proprietary algorithms in Stocklift's investment portfolio tracker, such as the Diversification Score, to encourage investors to contribute to their futures. Before joining Stocklift, Brendan was on the private equity secondaries team at RS Management and is very passionate about bringing institutional-grade insights to everyday investors. Brendan earned his bachelor degree in economics and political science at Brown University. Brendan, great to have you here. How are you doing today?
Great. Thank you, Stefan. It's such a pleasure to be here with Finimize and so happy to be talking about investing.
Awesome. So let me start with maybe it's a stupid question, but what's exactly an investment plan?
No, it's a great question. It's a document outlining goals, strategy, and tactics of what you want to do with your money, depending on what stage of life you're in. Like if you're saving to buy a house or provide for your family, or if you're about to retire, any stage of life, really. The most important part is coming up with the goals, because you can't hit a target that you're not aiming at, right? And then the second step is the strategy. That's how you're going to get there. Such as investing in a portfolio that's 60% stocks and 40% bonds. Like that's one strategy, for example. And then the tactics are the actual steps you're going to take, such as picking which stocks, ETFs, or mutual funds you will invest in. Other investing plans will include stocks, bonds, ETFs, mutual funds, but also more complex things like life insurance, annuities, or alternative investments like real estate or private equity.
Okay, cool. So it's pretty unique to me. For example, if I want to come up to a plan, it's really going to be super specific to my situation, goals, objectives, etc. Cool.
Exactly. It's all about what you're bringing to the table and your goals.
Awesome. And why is a 5-year plan important?
Well, it's important because setting a financial goal and taking actionable steps toward it every month, like setting aside a certain amount for investments every month, is the best way to keep you from getting distracted from your long-term goal and from spending all of your money, really. And this is because you'll have a million opportunities to spend your money, and it's really hard to say no if you don't have a goal you're working toward. It's really hard to say no to a new car, expensive clothes, random eBay purchases, late at night, if you don't have a goal in mind. And more than that, it sets you up with a foundation for the rest of your life to do the things you want to do. And the hardest part is really deciding what you want to do with your money. And then once you do that, things kind of fall in place after that.
Okay, so how to design a plan that will help you achieve your goals?
Yeah, I think the best way to calculate it is using at least a basic financial model. And that's really the key thing that you can do as an individual or that you can do when you work with a professional. But it's about making reasonable assumptions about how your investments will perform based on the asset class and the type of investment, and then projecting the next few years to see how you will achieve those goals. A few key assumptions that you're going to want to put in your financial model, which is something that you can do in Excel or another spreadsheet like that, or Google Sheets, something like that, is some assumptions about the interest rate, the projected growth rate of your various investments and so forth, as well as the amount you'll save every month and inflation. So it's about taking those key factors, putting it into calculating some projections for the future, and then taking steps toward that every month.
Awesome. So let's make it a bit more practical now. How does it really all work in practice? So I saw that there's an option to request a financial plan on your website and app. So maybe you can walk me through that and what happens after that.
Yeah, absolutely. I can share an example with you if that's all right. And I'll just say first, like on Stocklift, for example, the way it works is you fill out a questionnaire. It's like 10 to 15 questions. As some are optional, and then your answers get submitted, and advisors have a chance to review that anonymously. They take a look and they'll respond to your request. So if they can help you, then an advisor will respond and work with you and maybe ask some more questions, and then they'll come out with a financial plan for you. So I can show you an example of what that looks like. This is an example, a real example. A lot of the data points have been changed, but this came from an advisor that's on our platform. Stocklift doesn't have advisors. We simply connect people with them. And this is the plan that one advisor came up with. So this is a case of a person here that has a net worth, and again, numbers are all changed, names are different. A net worth of $125,000. And that's 150,000 of crypto and 25,000 of debt, of credit card debt. So, you can see here, the first thing that a lot of advisors and professionals will do is they'll say, if you do nothing, right, what is most likely to happen? And so we have three situations here. Situation one is crypto prices stay the same. That's his main investment. So we're just going to say, what happens if that stays the same? The debt that he has will grow significantly over the next 5 years, projected here to be 122,000, which brings his net worth to 42,000. You then look at other situations. What if the price of crypto goes down by 50%? We've seen some volatility in crypto. It's definitely important to look at those potential outcomes. And then you see the net worth turns negative there, negative 32,000. And then there's a third situation. So what if crypto prices double from here, right? And then you see the net worth is still very positive, but there's still a lot of debt there. So the two takeaways that this advisor spoke about were that your debt is likely to grow faster than your investments, and the biggest risk to your net worth is high exposure to crypto. So then here you take a look at plan one that this advisor came up with. And the plan here is you pay down 100% of the debt now, and then you move 33% of your assets to stocks. And this was the plan that they were recommending. And you can see here in all three scenarios, the net worth of the client is very high, and in all cases higher than it would be if they hadn't paid down that debt. So this is the kind of advice they gave here, with some recommendations. So, to pay down 100% of the debt this year to avoid the risk of crypto falling and being unable to pay it in 5 years, which is a scary scenario. Diversifying your investments to keep from losing everything and make sure that things are moving on the right path, and keep 10,000 in your bank account as a buffer. So there's more complexity than this when it comes to actually implementing, but of course, this is generally what it looks like. The last thing to talk about here, a second potential plan, is to pay down 50% of that debt now, and then still move some of the assets into stocks rather than crypto. And so you can see, also these tend to be better scenarios than on the first page of if he does nothing. But you can still see significant debt here that seems to make the recommended option that I mentioned before the best option. So, this is a sense of what you'd be looking at from a financial professional in terms of the projections.
And is that just a one-off recommendation, or do you have the ability to kind of, come back with some counterpoints, questions, and basically open the conversation with the advisor?
Right, absolutely. I think this financial plan is really just the starting point. And so one of the things that we do on Stocklift is we provide a lot of flexibility, and we put the client in control of the relationship. So if they want to follow up with that advisor and talk more, then they can certainly do that through our platform. If they don't, and they want it to be one-off advice that they implement themselves, then that's great, and they can do that as well. And that applies to a lot of the financial plans that you're getting from these advisors. They'd be happy to help you implement it, I'm sure, and to actually take those steps. But if you want to do it yourself, there's nothing wrong with that either.
And what do you think is the single most important part of a financial plan? If you have to choose just one.
Yeah. I think it's by far, I think it's the goals, because it's really about setting the target for what you want to do in life. And that can be, like we talked about earlier, buying a car or a house or retiring. There are a lot of big goals that you can aim for. And, it's much more likely that you'll reach those goals if you start taking some steps. So I think defining the goal is the most important part, and also the hardest part.
Nice, thank you. Now I have a slightly, when it comes to financial planning or investing in general, what's one thing that you think everyone think is true, but you think is false, or vice versa, based on your experience?
Yeah, that's a great question. I'd say the number one thing that comes to mind from, after building Stocklift is that a lot of people think they don't have enough money to invest, or that it won't make a difference. And that's the big thing. I think that, already, like, I've seen firsthand users who have started investing small amounts after using our app, and some have reached out to us to share their progress and tell us about how it's going. And it's really encouraging to see such a big difference. And, like the simplest example is just someone who, doesn't know anything about investing. They start putting away, $50 or $100 a month or something like that. And after a few months, they have a few $1,000s, and that's an amount that is a great buffer for them month to month, or if they need to put down a deposit on an apartment, for example, or something like that, or if something in their car breaks. And it's a really important buffer, and it's so great to see people able to build that so quickly, I think. And I think the biggest hesitation that a lot of people have is just thinking that it won't matter. But with compounded interest, it certainly does.
So who should really, do a financial plan? I mean, like, who is it most important for? Or is it, people with a lot of wealth? Is it people with a very complicated financial situation? Is it just young people just because they have like more years ahead? Who is it really, I would say, most impactful for?
Right. I would say generally it's more impactful the sooner you start, just in general. But I think overall there's something in it that can help everyone. I mean, and I think that really, again, just to get back to the goals that we're talking about, it really depends on what your goals are, because setting those goals as soon as possible will really make a difference, and make it more likely that you'll achieve those outcomes. So I think it can make a difference for anyone, whatever you're striving for, whether that's, a purchase, or, retiring early, or whatever it is. You can't get there if you don't take active steps towards it.
Awesome. Thanks a lot, Brandon. So now let's move on to the Q&A. So please share any questions you may have on the Q&A box, and vote for the questions you want to see answered first. So, okay, the first question is, if Stocklift is in effect acting as a referral to a financial advisor, what services can one expect to receive from the advisor? Strictly investment advice, or is it, other things like estate planning, tax strategy, etc.? Is that all included as well?
Right. So that is all included in what we in the advisors that we have on, and it'll be specific to that advisor and what they offer. But basically on Stocklift, what you do is there's a text field it says, is there anything else you'd like to ask an advisor? You can be very specific about what you're looking for. So you can say, I really need accounting advice on some investments. I just sold some, and, I want to decrease my capital gains tax, for example. And, the great thing about our platform is that we're not randomly connecting you with an advisor near your area. We're actually letting the advisors choose based on their own ability. So that means that whether you need an introduction to an estate lawyer or you need accounting advice, you can put that information in there. And the two ways you can do that is, excuse me, you can ask a question or you can book a call. Those are two options to do that. And just tell them what you need, and someone will answer and connect you with the right people.
Okay, it always feels like financial plans or for people who can afford an advisor. How can an individual feel confident building their own financial plan without paying, them an advisor?
Right. I think that the best way to do that is to start with some models and templates online. If you just search online, you can definitely find financial models both for budgeting, investing, and so forth. And I would start there and think about plugging in your information to that kind of thing. And then I think the best way to do it from there is talking to other people. I think and whether that's an advisor or that's a friend or someone else who seems to be managing their money well, it's never a bad idea to just reach out and say, hey, I'm putting together a financial plan for myself. I'd love to get your advice on it. And what we've found from doing this enough, we've had enough people reach out to us with questions, actually, even though we're not an advisor ourselves, that we wanted there to be a place for experts to come in. And so there's a place for that, but you can take the first steps on your own. And then if you need other help or either implementing it or understanding the model, an advisor is a great way to do that. And and Stocklift allows you to do that in a way that doesn't keep you from leaving the relationship if you want. You're in control and you can decide how you want to approach it.
Next, what is the fees for the services?
On Stocklift specifically, we charge as little as $12 to ask a question to an advisor. And then a financial plan, for example, is $45. So that's just to start the relationship. And then after that, if you do end up deciding to want to work with an advisor, and again, there's no pressure from Stocklift to do that. But if you do want to work with them and they have some good ideas for you, then there might be other fees that they charge separately depending on how they operate as an advisor.
Okay, I guess that kind of answers the next question, but you can still, if you have anything to add, how are the advisors compensated for their services?
Right. I'll say on Stocklift in general, they get a percentage of that fee. So they'll get a portion of that $12 if you ask them a question. And then typically, I'll just speak to quickly, like after that relationship, with Stocklift, you can work with them, and there are multiple different ways that it can work. There can be a single fee, an annual fee. So like, it could be $1,000 or $2,000 to, receive a financial plan from them and check in a few times a year. They could also, if you're giving them money to manage, they may take a fee in the range of 0.5% to 1% per year. And, there are also some other things, like, for example, if you are looking for life insurance through advisors, a lot of advisors do life insurance, for example, then you actually generally won't have to pay them a fee for that if you end up doing life insurance with them. So it really depends on the advisor, but those are the broad strokes.
Awesome, thanks a lot. How do I tell if I have a good money manager? I feel like the transparency could be better.
Well, I think that the relationship is one of the most important things, and the trust. So I think if you're feeling like you can trust them and that there's transparency, you know, and I don't know the specifics of your situation, but you know, a common thing in the industry is that, you know, there should be some kind of dashboard or login for you to see what's happening with your money. So you should be able to check in and see, you know, yesterday my account was at 10,000 and now it's at 12,000, something like that. You know, so you do want there to be some transparency so that you're just up to date on what's going on, especially if you're giving them money to invest for you. You know, and then I think also just making sure to build that relationship and you know, making sure that your interests are aligned with them, and that, you know, they're not that the products that they're directing you toward are really the best ones for you.
And then I guess a sort of follow-up questions. How do you curate or vet your advisors?
We have a pretty lengthy process. The first step is that they fill out a long questionnaire that includes things such as their passport or driver's license. So, you know, we're screening that. We're checking to make sure that they are registered advisors. And there's there's different regulatory bodies in the US or the UK, for example, to check that. So we're making sure that they're registered, that they're in good standing, which those websites will also provide, you know, and checking their background and their company and so forth. So it can vary based on the advisor, but, you know, we really want to make sure that we have the highest quality on our site.
Now, a bit more of an investment-related question. What would you recommend your portfolio to look like percentage-wise with stocks and funds?
Right. Okay. Yeah, I'll take a step back and say, you know, there's also the question of bonds that a lot of people ask about, you know, which can be included in funds often. And so, you know, I'd say there's no one right answer. And I can't speak to anyone's situation. I don't want to give specific advice, but I can say that when you're generally looking at what financial advisors will do for you, it depends on how far away you are from retirement, essentially. So if you're very close to retirement, they're going to recommend a more diversified portfolio. And so that, you know, close to retirement, that may be more like, you know, 50% stocks, 50% bonds. And within the stocks portion, I'm including things like mutual funds and ETFs. So, you know, but basically equities would be 50%, you know, bonds might be 50%. And it can vary a little bit, but the point is that at that stage, you know, you want to be more diversified so that if there's a stock market correction that's 20% next year, you're not going to be, you know, you're still going to have the income that you need from your assets to live on and be retired. And then, you know, I'd say as you go, you know, the younger that you are, the more aggressive in terms of equities people tend to be. So, you know, if you're, let's say you're 20, you may have, you know, 100% or 90% invested in equities, and then, you know, that other 10% or so invested in bonds, you know, because you're really looking at the long term. And, you know, a lot of advisors will generally stay away from stock picking too much. You know, there may be you know, maybe let's say within your portfolio, you have, you know, let's say half of your equities are stocks and then half are mutual funds. They definitely wouldn't just be stock picking 5 stocks, for example. It would be much more like, you know, you have 20 stocks or 30 stocks and you have some mutual funds or ETFs. So that's just a general sense of it. And that's just to keep you diversified so that you don't have that downside risk.
Does Stocklift function as a debt management platform, i.e. for those who want to clear debt before investing?
I think basically so in a sense, we have some do-it-yourself tools that can help you manage that. So right now we have a portfolio tracker and analysis. So what that means is through Plaid, which is the company that Venmo uses, you can connect your brokerage accounts and you can see analysis of those accounts. So that will include debt if you have debt in those accounts that you're connecting. And, you know, you can see your net worth overall, and you can see projections on, you know, how that how that may grow. And we have a lot of disclaimers around that, but we try to give a broad gauge of what that will look like. I think beyond that, if you're talking about needing a very specific financial model to do that, while that's something that, you know, we're certainly working on at Stocklift, often financial advisors will have one built out, and they can typically just plug your numbers in and figure out the best way to pay down that debt based on the interest rates of that debt and what makes sense to start with.
Another investment related question: how do I know what to diversify with?
That's a tough question, and it really depends on what you already have invested. I'd say that typically, you know, again, just speaking broadly to what people do or to what advisors will try to do, I would say that some broad index funds are generally something that's recommended often, you know, such as an index fund that tracks the S&P 500 in the US or the FTSE in the UK. And so, you know, it's really going to be getting a broad range. One thing, this will give you some clue into it from what we have on Stocklift, actually. We have a diversification score. So if you connect your portfolio, you'll see a broad gauge from 0 to 100 of how diversified you are. And, you know, some of the things that we're looking for is how many stocks are you invested in? So, and across which industries. So it's really important. There are 12, generally considered 12 stock market sectors. I think that includes crypto. And so what we're looking for is, if you're invested in a broad range of those sectors, it doesn't have to be all 12, but a broad range of them, and also how many investments you have. So it might make sense to have a few investments in each of those sectors. So that could be, you know, for example, it could be 3 energy companies, or it could be 2 ETFs that invest in energy companies within a given sector, and then broadly looking to diversify among those sectors. And then taking a step back as well, you want to look at potentially some bond funds, you know, including, you know, having a range of, typically advisors will have a range of treasuries, which are the most secure bonds and bond funds that you can have, as well as, you know, and that's in the US in particular, but, you know, the equivalent exists, of course, in the UK. And then also having, you know, there's some corporate bonds and bond funds that you can also invest in. So it's about having a range of things and then being able to model out the risk and take that into account.
And is this available for US market? I guess the more general question is it available everywhere?
Yes, we are available, you know, in the US as well. You know, our headquarters is in the US, and, you know, we're happy to connect people from anywhere. You know, we have services, you know, like we also have a social media community, and so, you know, of course, that's available to anyone around the world. And we do have people from a range of countries.
And I see a last question. Each US state requires advisors are allowed to practice in a specific state. I guess you're covering that.
Yes, exactly. So that's someone there who really knows their regulations. And exactly, so advisors tend to be licensed in a number of states. You know, typically, from what we've seen, a lot of them are licensed in at least 10 states. You know, and then also a lesser known thing that we've realized is that also there are each advisor, even if they're not licensed in a state, can generally accept up to 5 clients in that state before they even register in that state. So there is broad flexibility for advisors across the board. You know, it's just a question of how many clients they have in that state.
And the last question, actually, are the registered investment advisors for the US only?
No, they're not for the US only. We have a broad range, you know, across Europe and the US primarily. You know, and there may be, depending on the you know, regulations in your specific country, if not covered in those 2 groups, you know, there may be flexibility as well, and advisors may be able to cover that depending on the country.
Awesome. Thank you so much, Brendan. I'm afraid that's all the time we have today, but thank you so much for joining us. And I hope this has been enlightening and informative for all of you. You can join us for the Modern Investment Summit on December 3rd and 4th. This two-day event is packed with back-to-back sessions and workshops led by the biggest names in finance. So, don't miss out on this incredible opportunity to elevate your investment knowledge and network with fellow retail investors. You can pre-register for your ticket using the link shared in the chat now. As you leave the event today, you can see a pop-up survey that should appear on your screen. Please take a few minutes to let us know what topics you're interested in hearing about a future event. But Brendan, honestly, this has been a fantastic and very valuable and insightful presentation. Thank you so much. Thanks everyone for joining and hope to see you soon.
Thanks for having me.